Today, this video is going to be about the state of the real estate and mortgage market for December 2022. My name is Alfonso Rodriguez. I'm licensed in real estate and mortgage, and the goal of this video is to provide value and useful information that you can use to make an informed decision. So here's what I see going on in the real estate market for December 2022. Keep in mind, I'm gonna make future videos so that way as things change, I'm gonna create videos like this one to give you an update. But right now, here in December 2022, what I'm seeing is that prices are continuing to come down, but at a slower pace than they were 3, 4, 5 months ago. Home sellers are really understanding what's going on, and builders have been ahead of the curve and have reduced prices at a faster pace. However, I'm starting to see inventory dry up, which means that while there's still demand out there, that means that the need to do deep price cuts faster is not there as much. It just really depends on the home, the scenario, and the initial asking price. Now, keep in mind, everything that's going on with the prices in real estate is 100%, in my opinion, driven by what's going on with interest rates and mortgages. It just doesn't make sense to purchase a house at a 7% interest rate at the prices that we were having earlier this year when interest rates were at 3%. So either the prices have to come down or interest rates have to come down in order to support that price, because most people get pre-qualified by payment, not by price. Now, price has something to do with the payment, but you can only get qualified for as much as you can afford the payment. So when you have an interest rate that's double what we started off at the beginning of the year, your payment, the amount that you can actually pay, remains the same. So prices have to come down in order for that to be affordable, and not everybody can afford a $5,000 mortgage. Now, I'm still seeing a very high demand for homes in this market here in the Austin market, which includes Austin and all the surrounding areas, as far up as Gerald and as far south as Kyle, and as far east as Bastrop, and as far as west as Spicewood. So there is demand for homes in all those areas. Prices are going to vary depending on the area and the type of house and build. And the economy here overall is still really good, and businesses are still coming here or in the process of coming here and setting up shop. So I expect our real estate market to fare better than other real estate markets here in the Texas area. Now, when it comes to the best time to buy a home, I believe the best time is going to be starting now all the way until spring, summertime 2023. And the reason why is because we're in what's considered a part of the market, because real estate market is driven by cycles, and we're in the part of the cycle where it's off peak. You know, people are in school, in work, holidays are coming up, so there's not a lot of interest of people out there buying houses. However, there are still people out there buying houses, and there are still builders and sellers selling homes. So right now is where, in my opinion, you're going to get the best deals, be able to negotiate a better price. But as we get into the spring, summertime 2023, that's when I think people are going to start jumping back into the market. Inventory is going to dry up. I don't believe it's going to be a crazy frenzy that we've seen over the past couple of years. I sincerely hope that we never go back to that, but we're going to go back to a more traditional market where prices start to stabilize. And by then, the expectation is that interest rates are going to be going up at a lower pace, or maybe even going flat, possibly even coming down. So when it comes to the best values on house price point wise, it's going to be with the builders. When you're looking at price per square foot, what you get, features of the home, in terms of the overall pricing, new builds still, in my opinion, have the better value. However, the resale homes, used homes, those prices are starting to almost match and come down to the point where it's comparable depending on what you consider valuable to you. And when it comes to the mortgage interest rates, builders are going to be offering the best incentives. However, sellers are also coming up with ways to address that by offering a seller credit, so that way you can help buy down your mortgage. So interest rates right now are hovering around the 6.5–7% range, which is a little bit lower than our highs that we've gotten, which 1 or 2 months ago was over 7%. And a lot of people are looking at creative ways of financing. So there's temporary buy downs, and then there's the adjustable rate mortgage. There's also a way to buy down the interest rate for the full term of the 30 years. I don't want to get too much into that because there's a lot of information, but if you wanted to get more details on the temporary rate buy downs, the full fixed 30-year buy down or an adjustable rate mortgage, feel free to get in contact. Now, as I mentioned before, builders are getting pretty aggressive on the incentives they're offering to help you get a lower mortgage. And that, like I mentioned earlier, mortgages right now are around 6.5–7%. And from the builders that I've seen out there, you can see you can get as an incentive from the builder's lender or their preferred lender a mortgage anywhere ranging from the 4 to 5% range, which when you calculate the cost of what it will cost you to buy down your mortgage to that rate, that's thousands of dollars. And as I also mentioned earlier, sellers are very aware of what's going on and they have to have a way to compete. So a lot of sellers off the bat, whenever they put their home up for sale, they're offering an incentive, a seller credit is what it's called, to be credited back to you as the buyer to help you buy down that mortgage. And then you work with your own lender on getting using that cash to either pay for your closing costs or set it aside to buy down the interest rate. Now, some home sellers, you have to negotiate that, and it's not something that's automatically given, like if you went to go to a builder and they were offering that as an incentive to everybody. Now, the expectation going forward with interest rates that I've been getting updated on and from industry talk is that the Federal Reserve is going to start lowering the pace of interest rate hikes. So previously they were increasing the rate by 75 basis points. There's talks about the future rate increases going down to 50 basis points or even 25 basis points. It really depends. This is all kind of hypothetical talk or wishful thinking maybe. But the reality is that the interest rates are having an effect on real estate markets, not just in real estate markets, but also just the economy in general, because mortgages is just one portion of everything that's going on that's tied to the Fed hikes. So like I said, the expectation is that they're going to start lowering the pace of rate hikes to the point where eventually it starts leveling off and hopefully coming back down. But that's going to take several months to happen, maybe even several years. But it could be an opportunity for you right now to get a home at a much lower price, because what I expect is that when interest rates starts coming down, people are going to get back into the market. They're going to want to buy homes, and it's going to start giving more support and even a rise to real estate values. Now, here's a quick tip that a lot of people don't realize is, like I mentioned earlier, interest rates are around 6.5–7%. We started off in the 3% earlier at the beginning of the year. And so when you look at a house, let's just take any house that you're in the area that you're interested in, see what it was selling for 12 months ago and calculate what the interest rate was on that home, and then do the recalculation on what the price is now at a 7% mortgage. You're actually coming out ahead. So if you need some help or a little bit of scenarios on that, I can definitely provide. But what that means is that right now, even with a higher interest rate, where prices have come down to, you actually come out ahead. And here's something to keep in mind. If you're able to negotiate a seller credit in addition to a lower price, then you can even buy down the interest rate even more, or just wait for interest rates to come back down and refinance it and get the best of both worlds. If you haven't already committed to a realtor yet, I would love to hear from you. I offer a free, no pressure, no obligation conversation about what you want to accomplish, what your goals are, what your current situation, and explain how my services can be a huge value to achieving your goals. I can also provide a specific market analysis on your home or on a home in the area that you want to buy, then give personalized service and advice. Now, depending on where you're watching this video, there should be a link down below or an area down below where you can fill in your information to get in contact. You can also call or text me directly at 512-809-0091. And I'd also like to hear some feedback on anything that I've said in this video. If you're on Facebook, YouTube, LinkedIn, you can leave a comment down below. I will respond to it. And if there's any kind of topic or questions that you have, you can leave that information below, or you can just get in contact with me directly. Thank you so much for watching this video, and I look forward to hearing from you.